Hi guys, I am VP. In this video, we are going to see what is a cash flow statement of a company. In the financial statement of the company, we have already seen what is a profit and loss statement, what is a balance sheet of the company. Now let us see what is the cash flow statement of the company. Okay, let's get started. Broadly, we can classify the cash flow statement into three types. They are cash flow statement from operating activities and cash flow statement from income activities and cash flow statement from financing activities. Okay, what is the cash flow statement from operating activity means is what and all the company used to spend in their day-to-day activities like marketing, sales, likewise. That and all comes under the operational activities. Okay, and if the company buys the property, land, or shares in the other company, that and all will comes under the investing activities. The financing activities are if the company pays out the dividend or if the company borrows the money from the bank. These and all comes under the financing activities. Okay. In the previous video, we have seen the profit and loss statement as well as the balance sheet. Now we are seeing the cash flow statement. The thing is, the cash flow statement, the P&L report, as well as the balance sheet are interrelated with each other. Okay. The thing which are shown in the P&L report may also comes under the operation activities. The investing activities all comes under the asset section in the balance sheet, and financing activities all comes under the liability section in the balance sheet. Okay? If the company borrows money, that all comes under the liability section in the balance sheet. Okay. The thing is, cash flow statement, P&L report, and balance sheet are interrelated with each other. Okay. Many investors will give importance to the cash flow statement rather than the P&L report because these statements shows the in and out of the company's financial. If the company receives 100 rupees or if the company spends 100 rupees, everything will be come under the cash flow statement of the company. Okay. In the previous video, we have seen the restaurant business. Okay. Now for that, we can create a cash flow statement. Okay. Now let us consider the to promote the business, the owner is printing the placards or giving advertisement. That and all comes under the operational cash flow activities. Okay. If the owner of the restaurant buys a new land or buy new equipments, this null comes under the investing category because it is going to produce him value in the long term. Okay, this null comes under the investing categories. If the restaurant owner borrows the money from the bank or bank loans, this null comes under the financial activities of the company. Now let us see a correlation between cash flow as well as the assets of the company. To make ad posters, the company need to spend the money, that is decreasing in cash flow. But by the advertisement and banners, the company will increase their profit. Okay, because many of them let to know about the restaurant and they will come and eat, so that their revenue will increase. Okay, so that the assets will increase. In the operation activities, if the cash flow decreases, the assets increases. Okay, likewise in the investing activities also, to buy the land, to buy the equipments, the cash will decrease, but long term they will provide a value to us, so that the cash decreases and the asset increases. Okay, in the financing activities, our cash increases because we bought the loan from the bank. If the bank loan increases, then in the perspective of the company, our assets decreases. Okay, these are the correlation between the cash flow and the asset. And if the company spends amount improving the assets of the company, then the spending is called as a right spending. Okay, and investors should note all the spendings the company make and whether it is in the long term it will provide value or not. The investors should check this. Okay, now let us see the cash flow statement of the Infosys company in the example you have seen before. Okay. Now here we are seeing the consolidated statement of cash flow. We have already seen they will divide the statement into three types, that is cash flow from operating activities and cash flow from investing activities and cash flow from financing activities. Okay, if we see in the cash flow from the operating activities, they mentioned the what is the profit for the year. That is, we have already seen 4,108 crores is our profit for the year 2023. Okay, at first in the operating activities, in the particulars they have given what are all the income tax expense and what are all the amount they have spent for the depreciation and amortization. And if you see here, the net cash generated by the operating activities, okay, that is 22,467 crores. This much amount the company spends for their operational activities. Okay, now we can see the cash flow from the investing activities, that is where and all the company is invested their money. Okay, if something is written inside the bracket, that means that is a negative value. The company has invested in the expenditure on property, plants and equipments, deposits placed with corporation, like that. Okay, the net cash generated from the investing activities is negative 1,209 crores. Okay, and we have already seen that in the operating activities the company has spent around 22,476. Okay, if you see here the cash flow from the financing activities, net cash used in the financing activities is around again negative 26,695. Okay, and to get the net increase or decreasing in the cash and cash equivalents, we should add these three values. Okay, then we will get negative 5,437 crores. Okay, that is the net increase or decreasing in the cash and cash equivalents. Okay, and this is for the current financial year. If you see here, there is already we have the existing cash of 17,472 crores from the previous year. Okay, then we can consider the cash and cash equivalents for the beginning of the period. That is, from the previous year we can take this amount, that is 17,472. Okay, and if we minus the 5,437 from the 17,472, we can get the net cash and cash equivalents of 12,173 crores. Okay, this amount of cash the company has, the cash and cash equivalents, are also called as the current asset or the liquid asset. The company can easily access this money and do whatever they want. Okay, that is the cash and cash equivalents, are also called as the free cash of the company. Okay, so see that in the balance sheet under the current asset, the cash and cash equivalents will come. Okay, we just seen the outline of the cash flow statement. For a company to company, the things will change, and we should read all the notes to know about the exact things what the company has done. Okay, as an investor, we should analyze whether the investment the company has done, whether it will produce a value in the long term or not. As an investor, we should analyze it. Okay, even though we cannot know everything about the company, or even though we cannot access everything about the company, at least by reading this financial statement and the report from the company, we can try to understand at least what the business is doing and how well the company's financial strength are. Okay, after analyzing the company, we also have an important thing, that is whether we are buying the share price at the correct value or not. Okay, to know that we should know the financial ratios. We can see that in the next video. Till then, stay tuned. Thank you for watching.